Comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu. We're counting it down to the closing bell. Here to help take us beyond the bell. It's a global simulcast, joined right now by Jess Menton and Paul Sweeney. In today for Tim Stenovic and Carol Massar. Welcome to our audiences across all of our Bloomberg platforms. That includes television, radio, Bloomberg Originals, as well as our partnership for those folks streaming on YouTube. Jess, a good day in the markets all around, but particularly good when it comes to the big cap tech stocks.
Yeah, when you look at this, especially communication services, right, leading the way up around 3% today.
That's just tech, right?
So thinking about
it's like discretionary is tech, autos is just tech,
Google,
right. Meta, all that stuff.
Meta, all that stuff, yeah. Well, if you look at Alphabet, though, I mean,
yes.
It's housed in communication services as well as Meta. And
remember when Alphabet changed its name and everybody this is the most ridiculous
Google parent, it's still Alphabet. It's always fun as a reporter to have to put that in my copy, I gotta say,
You know
Paul.
how long it takes us bankers to come up with these ticker symbols and then they go switch the name of it?
Well, I think it's funny, Paul, that they never switched the ticker symbol, right? Shouldn't it be like ABC?
Yeah, true. Very good point.
Although Facebook did change it when it went to Meta.
It did, exactly.
Yeah, I have a feeling they're going to change it back at some point, given the way Meta's going, the metaverse. Whatever happened to the metaverse? Did I miss it?
No, he's still investing in it. It's just not as robust, and he's not making such a big deal about it. Just be quiet. He's focusing on cost cuts, and that's worked for the stock.
Yeah, certainly so. And I mean, we should just point out, I mean, we kind of joke about this, but on a day where we're seeing all seven of the Magnificent Seven stocks in the green, but firmly in the green too. I mean, Alphabet up 5% on the day, Meta's up 3%, and Nvidia, of course, which is everybody's darling this year, up more than 2%. Amazon getting a bid as well, Apple and the likes as well. About 60+% of the S&P 500 moving into the green, and that gives us an 0.8% gain on the S&P on this Thursday afternoon. That's higher by about 36 points. The Dow Jones Industrial Average up by 63 points, or about 0.2%, while the NASDAQ, which we were just talking about, up almost 200 points, or about 1.4% on the day. And Jess, let's take a quick look at the Russell 2000, the small caps, higher on the day, but a relative laggard, a bit of a switch from what we've seen in previous days, but higher by 0.9%.
If you look at the number of daily advancers in the S&P 500, up about 63% of them higher. You look at the daily decliners, 37%, Scarlett.
Yeah, and that shows up in the sector performances as well. There's only 5 sectors in the red. Everything else is in the green, led by media and entertainment. So we talk about communication services. You want to slice it a little finer. It's media and entertainment that's leading way, up 3.5%. Chip companies, and that's NVIDIA and AMD, up 2.5%. And autos, Tesla, gaining 1.3%. On the downside, energy, commercial and professional services, and utilities in the red.
Yeah, I'm looking at some of these gainers here. As we've been talking about, it's been the big tech names. I just look at my good friends at Google, and I'm going to keep using Google. Apparently, they have an AI offering as well, Gemini, and that's what the market likes to see there. So you got to think of a company with the size and the resources of Google. If there's an AI play, they will find it. And then in the chip space, AMD, the CEO debuts a new chip, again, focusing on AI, and he puts out a really bullish forecast on his expectation for the market for the chips for AI. And that got everybody's attention, and that bid up a lot of anything AI related, and that includes NVIDIA, which had been, and probably still is, the poster child for getting exposure to AI.
Looking at these decliners, Paul, you and I this morning in pre-market, we were talking about Chewy with, of course, the one and only Tom Keene. It came well off the session low, so closing about 0.6% lower now. So really paring back some of those losses from this morning. But the stock did drop after the company did cut its guidance for the full year on net sales, so that did miss those consensus estimates. Another stock I'm looking at is Sprinkler, CXM. That's a $3 billion market cap company, but this is an enterprise software company. So if you look at this, dropping 33%, this is its biggest drop on record. It did come after the company did post a stronger quarter that included a top and bottom line beat. But unfortunately, if you look at some of that growth outlook, it did disappoint investors. And then, don't tell Tom Keene I'm bringing this one up, but C3 AI, of course, we talk about some of those AI and either sort of crypto-related stocks, but AI is a ticker symbol on this. But looking at that stock, dropping close to 11%, worst day since September 7th, but this is a data management company, though. If you look at this, though, issued a forecast for an operating loss for the fiscal year.
Yeah, a lot of the AI names down. We should point out a lot of the enterprise software companies moving lower on the day, including Okta and a few others, on the back of additional weak earnings in that enterprise space. And Klaviyo now dropping back below its IPO price once again. Meanwhile, you go to the Treasury market and the price action was a little bit more muted. Maybe a lot of folks are kind of waiting until tomorrow when we get a jobs report and next week when we get that big Fed meeting here. But you take a look at the moves across the curve here. Most of the activity you were actually going to find on the shorter end of the curve. That pushed the 2-year yield down just just a bit here, while the rest of the curve did move higher just a little bit here. So the belly out to the long end, a bit cheaper here right at the close.
It definitely feels like we're in a holding pattern right now, waiting for this jobs report. And I'm not sure it's going to clarify all that much, right? I mean, the narrative is pretty much set that the labor market is cooling and inflation when it comes to wage increases is going to slow. Of course, it's not going to get to that 3.5% year over year number that the Fed is looking for, but it's moving in that direction.
Two interesting things in this report. We're talking the average of estimates based on the Bloomberg survey, 183,000 jobs created. Now, Michael McKee points out that about 33,000 of those jobs are related to the UAW strike.
Yeah.
So that puts us more about 150, which is in line where we were last in the previous month. But what I also think is interesting is that nobody really expects the unemployment rate to change, and nobody really expects a material change in the rate of average hourly earnings.
Yeah, well, I think still, we're looking at real average hourly earnings up about 4% year on year on the consensus basis. That's the outlook. That's pretty darn solid out there in a fully employed economy here. So still decent, very strong labor market. And now we're starting to see it again continue in the wages.
Continuing in the wages, and it's the definite thinking point here for the Federal Reserve. Jess, this is going to feed into expectations for inflation, which of course is going to be the next data point for everyone.
That's coming on Tuesday, so we'll have CPI then, and then PPI, producer price, is also a component, and that is trade services, which is a key gauge if you're thinking about what that means for corporate margins on Wednesday ahead of the Fed decision. So we still have a lot of data coming up before 2:30, and obviously when Powell speaks on Wednesday, but then 2 o'clock.
We also got a lot of earnings still hitting the wire, including DocuSign and Lululemon. Let's get right to it. Lululemon shares down here in after hours trading. The headline numbers coming in for the third quarter. EPS at $1.96 a share. Not quite clear the comparison on that just yet, but taking a look at the revenue figures, it does appear to be pretty much in line with estimates, $2.2 billion. The adjusted EPS figure also does look like to be a modest beat. Their forecast for the fourth quarter, here you go. Revenue, a range, $3.14 billion to $3.17 billion. The street was looking for 3.18. So the top end of that range, just a whisper below what the street was looking for here. And the company also saying that for EPS in the fourth quarter, $4.85 to $4.93 a share. The street on average was looking for $4.93. So the top end of that range meets the average estimates here. So not really looking like it's going to be a major beat should those numbers actually come to fruition.
What I'm looking through the release here, and what's interesting and what strikes out at me is this partnership that Lululemon has entered into with Peloton for using its content, its digital fitness content. So it no longer produce its own hardware, which is the mirror that it acquired a number of years ago, but it's going to use Peloton software. I know that it had been looking to sell the mirror, but was not able to find a buyer just yet. So I guess this is the next best move.
I'm actually intrigued by this because remember when they bought that, everyone kind of scratched their head and they say, is this really the direction they want to go? And I guess we have now. I think answer Paul.
It's big on Peloton.
That was on the heels of the pandemic, which made
is Paul. Paul's very big on.
I'm big on the Peloton bike, guys. You don't want to go up against
He also has the treadmill, right?
We have the treadmill as well, but I do
you
not.
have the mirror?
And I repeat, I do not wear Lululemon when I'm on the bike. So just to get that image out of your mind.
Can I just say, Paul,
I'm shocked.
you might want to change your mind. I was a Lululemon hater. And you know what I did? I was looking for a good golf shirt. I know you're a big golfer. And somebody recommended one of their shirts, and I'll give you the exact name of it off air. This shirt is fantastic, Paul.
All right.
I mean, it is whisk. If it starts raining, the droplets just fall off. It's breathable. I'm just like a salesman for it. I'm a believer. Now, that's the only item I own from them, but still, it was
you wear suits every day because of what you do, but if you could dress down, you'd be wearing Lululemon
from the waist
as well.
up. Sorry, from the waist up.
No, we have full body shots on Bloomberg Television. We know that you're wearing a three-piece suit.
Maybe.
No, that's hilarious. But anytime I hear Peloton, I always think of Paul T. Sweeney.
That was a pandemic stock like no other, boy.
What a ride.
He stuck to it. Look at you, Paul.
Oh, yeah.
Before we move on, I just want to get, sorry, I interrupt though. We did get some other earnings out of DocuSign, and I just want to point them out because this is one of the biggest movers in after hours trading right now to the upside. They had a big beat in the most recent quarter. Those 3Q numbers on an adjusted EPS basis, 79 cents versus an estimate of 63 cents here. And the revenue numbers also came in about 10 million above estimates. They gave a full year forecast of 2.75 billion for full year revenue here, which would actually top their previous forecast as well as the average on the street.
And of course, we're still waiting for Broadcom to release its results as well after it absorbed VMware.
Okay, yeah, I think we got to go, guys. We should point out RH also crossing the wire. We'll try to break that down for you after the break here, but that net revenue number coming in a little bit light. That does it for our cross-platform coverage of the market close on Bloomberg Television, radio, and YouTube. And just a reminder that Bloomberg Business Week is now on Bloomberg Originals. We'll all be back tomorrow at the same time, same place.